All right, everyone, a very good evening. I hope all of you have had a great day. And I hope everyone is looking forward towards the weekend, correct? So let us start today's third live streaming session, correct? Let me start by giving a quick introduction about myself. I am Harsh. I have 8 years of trading experience. I have been trading the Forex markets, the commodity markets, such as oil, gold, silver, copper, platinum, etc. And I have also been trading the US based indices such as the S&P 500, the Dow Jones 30, and the Nasdaq 100. Currently, we are also analyzing the Indian share market where we look and analyze the blue chip indices such as Nifty and Sensex, as well as look and scout the markets for trading opportunities in the Indian individual stocks as well. I am more of a technical trader. I specialize in technical analysis such as supply demand, price action, order flow analysis, swing analysis, wave analysis, and Fibonacci retracement analysis. When it comes to the field of technical analysis, the field is quite exhaustive and expansive. But the categories that I have mentioned previously will be the ones that I would be focusing on. I have been blessed to be trained and mentored by people who used to work as flow traders on the Chicago Mercantile Exchange. So it has been a privilege and an honor for me to learn and gain valuable experience from such bright minded people. I have also been successful in handling $20 million or 20 to $25 million worth of portfolio. And on top of that, I have also been able to succeed in generating 30 to 35% of profitability on an annual basis. The reason for sharing all this information is so that you beautiful people who are attending this particular live streaming session can be, rest assured that the value of content that is coming from someone who has the knowledge, the experience, and the expertise when it comes to financial markets. So I hope everyone is ready to learn because the third live streaming session will be focused on education, right? We will be shifting our focus from providing you with hot stock recommendations in the Indian stock market to providing you with education concepts, right, in financial trading. Today's topic will be based more about the international markets, correct? So we will be talking about the forex markets, the gold markets, and how these international markets can be compared to the Indian stock market. I can see Sophia in the chat. How's good evening, Sophia? I hope you're having a great day, and I hope you are all set for the weekend. So let us get started with. But before that, for everyone who are attending the live streaming sessions, first and foremost, a huge round of applause for everyone who are being dedicated in terms of attending our live streaming sessions. We at Dolphin Markets are providing you with valuable content, correct? Content in terms of analysis, in terms of hot stock recommendations, correct? Money making strategies. When the Indian share market is open between 9:15 a.m. to 3:30 p.m. Indian Standard Time, during that time, whenever the live trading sessions are taking place, we are basically providing you with money making opportunities, correct? Strategies that are provided from by Harsh to you so that you can earn, correct? And the third session is mainly focused on educational concepts, right? And we also delve more into the international markets. So let us start today's session with none other than understanding, first and foremost, what is the difference between forex and the stock market, correct? Which market is better? some people think that they have a bias when it comes to selecting whether it's the forex markets or the stock market. So let us dive into the PowerPoint, and as and how I would be covering certain topics, we would be looking at it based on charts as well, right? So we would try to induce even technical analysis and charting software so that we can get a better understanding in terms of the differences, correct? So let us start with the PowerPoint. Forex versus stocks. Which one is better? First and foremost, it is very important to understand, to get a clear depiction of what the stock market is, correct? So, as the definition suggests, the stock market is a marketplace where investors buy and sell shares of publicly listed companies. I'm pretty sure every one of you by now are clearly aware a stock is nothing but a company that has been listed on an exchange, whether it is the National Stock Exchange or the Bombay Stock Exchange, and people can trade, correct? So, for example, we have this particular stock which is called as GGBL. So, what is GGBL? It is Ganesh Green Bharat Limited. It is a company that is basically into production of electrical and solar equipments, correct? So this particular company is being listed on the National Stock Exchange, and people who are willing to buy the shares are allowed to buy the shares at the given price. So currently, yes, the markets are closed, but as an example, I am trying to convey the message, correct? So currently the price is at 4 to 5. So when the stock market opens on Monday, provided the price is around, for example, 425, people have the option to buy the current stock, right? Whether they want to buy one share, two shares, 10 shares, 100 shares, it is up to them. But this is basically the definition, the practical definition of a stock, right? And a combination of different stocks on an exchange comprise of a stock market, correct? Such as the Indian stock market. Now coming to the next sector, which is basically the forex market. So what is the definition of the forex market? The forex market is a global marketplace where banks, central banks, brokers, companies, and traders exchange currencies. I'm pretty sure everyone by now is aware that the forex market is basically an acronym for foreign exchange, correct? Every country having its currency in their own denomination has been facilitating goods and transactions with other countries. So, the medium of exchange in terms of monetary value is currency, and different currencies of different countries comprise of the foreign exchange market, or short term called as forex markets. All right, so in terms of forex markets, as you can see, let me put the example. There are many pairs when we are looking at the forex market, but some of the most prominent ones are going to be none or other than euro dollar, right? So foreign exchange with currencies being shared, transacted, bought, sold, they all comprise of the foreign exchange markets. Now there are many big players. It could be central banks, it could be investors, it could be short-term traders, it could be long-term traders, you name it. Everyone who is a part of, everyone in a way is directly or indirectly a part of the foreign exchange markets. Let's get back to the PowerPoint, and now let's try to understand the key differences between the forex and stock market trading, right? So first, let's start with, of course, the asset to trade. When it comes to asset, the kind of products that the forex markets are providing are basically currencies, correct? Currencies of different countries, correct? When it comes to share stock market, it's basically the units of ownership in a business, like we had talked about GGBL, for example, or let's take another example. For example, Arcade Plus, correct? So Arcade Ply is a company that is into the business of manufacturing furniture, right, from wood product. So it is a company that is providing its ownership based on a shared value in the market for people to buy at the price offered, correct? Now, when it comes to the forex market in terms of trading hours, I'm pretty sure everyone by now is completely aware that the forex markets do not have a timeline in terms of the markets are open for 5 days a week, 24 hours a day, correct? Right from Monday to Friday, right from the early sunrise till midnight, the markets are open when it comes to the forex markets. But when it comes to the share market, we are talking about the Indian share market. So the timings of the Indian share market are between 9:15 a.m. sorry, between 9:15 a.m. to 3:30 p.m. Correct. So over a span of around 6.5 hours is what the trading hours for the Indian share market persists. But when it comes to the international markets, including gold, forex, and CFD markets, the time frames are much more expansive, right? Almost 24 hours from Monday till Friday. When it comes to the leverage, correct? Now, I'm pretty sure everyone is aware by now when we're talking about the Indian share market, we are getting a leverage of just 1 is to 5, correct? I'm pretty sure everyone is aware of this. If not, let me just make sure people are aware. So, when it comes to the Indian share market, we are getting a leverage of only 1 is to 5. All right, let me just make sure I'm typing it correctly. And excuse me for my voice, since we have been talking since morning, we do tend to get a little, we get a sore throat. So we're getting a leverage of 1 is to 5 when it comes to the Indian share market. All right. And in the Indian share market with a leverage of 1 is to 5, and that is also 1 is to 5, and that is only based on intraday. So for people who are into intraday, when a trade is placed and closed or squared off by the end of a particular trading day, it is called as intraday. We are allowed with a leverage of 1 is to 5 when it comes to the Indian share market. And if you are planning to hold the trades overnight, one second, if you are planning to hold trades overnight, you get a leverage. You don't get leverage because the leverage reduces to 1 is to 1, correct? So in the English share market, the leverage that is being offered is only being offered at a is being offered at a leverage of 1 to 5 for intraday, and if you plan to hold trades for the next day, it is exactly at par of your account value. So whatever the amount of share is, for example, if we had to look at just on an example basis, correct? Let me just put a clearer chart. If you had to look to take a trade on NFL, right, National Fertilizers Limited, currently the price that was offered when the stock market was open, it was 122. If you are trading intraday, 122 into 5. So let me give you the value of that. 122 into 5 is 610. You can, with a share price of 122 during intraday, you can have a purchasing power of 610 rupees, right? That is only for intraday. The moment you're planning to hold trades for the next day, the leverage becomes 1 is to 1. So you need, at that particular point in time, your purchasing power will be only based on the value of that stock, correct? And multiplied by the number of shares that you are planning to buy. So we have talked about leverage, and leverage is very important. Now we have talked about the Indian share market. What about the forex markets? Now forex markets in general have a leverage of minimum 1 is to 100, right? Here we at Dolphin Markets are providing you with the leverage of, first of all, there's a minimum leverage that people are offering, but here at Dolphin Markets, we are also providing you with a leverage of 1 is to 500. We will talk more about leverage as and how time goes, but this is the main point of importance. The share market is providing a leverage of just 1:1 if we plan to take trades and hold trades, correct? But when it comes to the field of forex markets, it you are getting a leverage of 1:100 on a minimum basis, and we at Dolphin Markets are providing you with a leverage of 1:500. Aditya is writing, won't the leverage be more risky for traders? Yes, Aditya, leverage is a double edged sword. It can make you a lot of money and it can make you lose a lot of money as well. So, people who are aware of leverage tend to use it in a conservative manner. But having said that, with great power comes great responsibility, right? This is a dialogue that I remember clearly when I had watched Spider Man, and it makes a lot of sense. But we still have the power of, of this expansive power of leverage that we can use to our benefit. So I hope people are getting a clear idea of what we have been talking. Now, when it comes to volatility, in terms of volatility for the forex markets, the volatility is quite high when compared to the stock market, right? It ranges from low to high for blue chip stocks. And for blue chip stocks, it tends to be less volatile because since they have been already been established, they do not have much volume when it comes to volatility. But if you're looking at something called as penny stocks, right? Stocks that are offered at the value of pennies, they have massive fluctuations. But in general, the stock market, when compared to the forex market, the volatility is less, correct? Forex market has much more volatility. Then we have liquidity. Now, when it comes to liquidity in the forex market, on a daily turnover, the volume is expected to be approximately around $7 trillion, correct? But when it comes to the liquidity in the Indian share market, the value as of now, based on the research that I have done, is approximately around 1.8 billion, correct? So, sorry, 18 billion, my bad. So, comparing a volume, an average traded volume based on the share market to forex market, the forex market is in trillions compared to the stock market, which is in billions, correct? Yes, both the values are very large, but when we're talking about the forex markets, it is very huge, right? Then, in terms of influences on market price, correct? In terms of influences on market price, as you can see, for forex, the influencing factor is based on economic trends and political changes, correct? Since forex is based on foreign exchange of different countries, the factors that are creating the movements, whether bearish sentiment or bullish sentiment, tends to be based on certain factors that are decided by either the Federal Reserve or RBI, or it could be big banks and institutions, or it could be interest rates. So they are basically governed by international economic trends and political changes, correct? But when it comes to the Indian stock, I mean, let's just call it as stock market, right? So there are many factors such as company and industry performance, macroeconomic factor, and market sentiment. Since a company that is listed on the stock exchange can have its own internal dilemma, right? It could be having some issues with the management, it could be having some issues based on legal cases. So these are microeconomic factors. But when you're comparing it with the forex markets, it's not a company that you're talking about, it's a country that you're talking about, right? So there are macroeconomic factors that are influenced by the forex markets, and mostly it is microeconomic factors when influenced by the share market. Yes, there are macroeconomic factors for the share market as well, but when compared to the forex markets, it is quite um, it is conservatively small. All right. Then, in terms of cost, the forex markets have a low barrier to entry when compared to the share market. Let me give you an example on TradingView. All right. Now, looking at a pair, for example, let us look at Hind oil. All right. Now, okay, Hind oil has a lot of graphs. So let me show you a price based on this particular stock. All right. So first, let me talk about the share market, and then we will talk about the forex market. Right. Now, looking at an example of Gildev, for me to buy one share of Gildev, I need to have a minimum requirement in terms of investment of the value 308.05. That is the current value of the stock. So in terms of having the investment that is required for GDAV, right? GDAV, just in general, I'm talking about the stock market. You need to have good amount of investments, right? More amount of investments. But when you're comparing it with the forex markets, right? Entry into the forex markets are much less compared to the stock market. Since the stock market, if a price of a stock is mentioned, that is the amount of money that you need to have. I'm excluding even the movements, the variations in the price, right? So I'm talking of the bare minimum, a minimum of 300 rupees just to buy one share. So in share markets, especially in equity trading, you need to have a lot of funds when it comes to stock trading. But when we are looking at forex, because we had mentioned to you about leverage, correct? Since we are getting good amount of leverage, like mentioned over here, we are getting a leverage for the forex markets at a ratio of 1 is to 100 minimum, right? We at dolphin markets are giving you 5 times more of that, 1 is to 500. So with leverage, you do not need to have massive accounts, massive amounts in terms of sizability, right? For example, if we are having a leverage of 1 is to 100 with $100 account, you can have, a purchasing power of how much? Tell me the calculation. It's 100 followed by two zeros, correct? So now if I have to put the commas, we come to 100,000. That is the power, right? $1,000, $100,000 purchasing power. Similarly, if we are providing, as we are providing you with 500, right? So with a small investment of just $100 based on a leverage of 1 is to 500, all right, we would be able to do how much? So we would be able to have, sorry, there is one small correction, right? So one, two, three, four, one, two, one, two, three, four. All right. So in terms of leverage, this is what I'm trying to say. Just let me make sure the correct. It is correct, right? So 50000. So all right. Sorry, my mistake. All right. So with a leverage of 1 is to 100, even for $100 account, it is it is having a leverage that is converted in terms of purchasing power, right? So with a leverage, with a investment or with an initial account of just $100, you can be having a sizable account based on the values mentioned. Anyways, coming back to the leverage, in simple terms, you get more money, more purchasing power for the value of the investment that you're having. Comparing it to the Indian share market, the value of a stock that is mentioned is the minimum amount you require, and that too I'm talking of one share. People do not trade based on one share. You trade based on multiple number of shares, correct? So that is what we are talking in terms of leverage. All right, then next point will be based on cost. This is the cost that we have been talking. Because of the power of leverage, the cost to entry in the forex market is highly reduced when compared to the Indian share market. Then we are coming to assets to trade, right? So in the forex market, you can trade foreign currencies, and traders speculate based on how one currency performs against the other. For those of you who are new to forex trading, it is very important to understand that unlike the stock market, where you are trading a particular share, correct? For example, DDF Plastic, so the company that is basically into manufacturing of plastic products, you are purchasing a part of the company, so you're purchasing a stock. But when you look at the forex markets, the forex markets are not alone, they are always in tandem with another currency. So you will always have a scenario where, for example, the euro is against the dollar, or the British pound is against the dollar, or the dollar is against the Japanese yen. Certain examples, right? When you type certain pairs like euro dollar, or certain pairs like dollar Swiss. We'll come to the different pairs as well. But right now, we are just trying to make you understand that in the forex market, it is not one pair but a combination of two pairs. And I have been informing people that if you buy a particular pair, for example, if you're buying the euro, let me just mark it over here, you are indirectly selling the dollar. For since we are talking about euro dollar, I'm giving you the I'm giving you the illustration of euro dollar. Conversely, if you are selling the euro, you are indirectly buying the dollar, and this is the power of the forex markets, because in the forex markets you can buy and sell indefinitely, right? Unlike the share market, where generally it is more towards buying. Yes, you can short in the share market, but you can short only intraday. But when it comes to taking a trade and holding, you can take only long trades in equity trading. But unlike in the forex markets, you can be both, you can take longs and shorts without having the requirement of closing trades on a daily basis. You don't have any kind of restriction. You can keep trading consistently, whether long trades or short trades. So the effect that the forex pairs have is something similar to the structure followed on a seesaw. I'm pretty sure every one of you are aware that during our childhood days, when we used to visit the public parks, or go to the big gardens, we used to come across this particular playground equipment called as a seesaw. So we had two people sitting at the corners. Whichever person is heavier would fall down and the other person would rise, and vice versa. So if a person goes down, the person on the opposite side goes up. So it is similar, and that is why we call the forex pairs to have a seesaw effect. Buying a pair indirectly has the opposite effect on the opposite pair, correct? So the main pair that is in the front is called as the base pair, correct? The quote, the base pair, and the second pair, that is the one after the first pair, that is called as the reference pair or the quote pair, correct? So these are certain terminologies that we would be getting in more detail, but right now we are basically focused on the key differences, correct? Let me get back to the PowerPoint. So in forex trading, it is basically traders speculating how one currency will perform against the other. But on the other hand, in stock market, the primary assets are the shares, correct, in corporations. So as a shareholder, you invest in the company's success and can benefit from its growth through increases in stock value and dividends, right? So everyone is aware about this particular point, correct? As we had mentioned about trading hours, we had told you that the forex markets are literally operating for 24 hours a day, 5 days a week. It starts when the Australian markets open and closes by the New York markets when the New York markets close on Friday, correct? So this round the clock operation offers flexibility. This is exactly what I've been telling for people who are busy with responsibilities, whether it's job or family or any other commitment, can use the power, the advantages of the forex market, since it does not have a fixed time frame. You can trade in the morning, you can trade in the afternoon, you can trade in the evening, you can trade at night, you can trade at midnight. What I'm trying to say is, if it caters to everyone who is busy during the day. For example, if people are working during the day, they can utilize the power of the forex markets during the evenings and the night. On the contrast, if people are working at night, they can use the power of the forex markets to trade during the mornings and the afternoons. You cannot do that on a share market stock, right? Because the markets have fixed timings between, for example, if we are going to be talking about the Indian share market, the timings are fixed between 9:15 a.m. to 3:30 p.m. Yes, you do get after hours and you get some flexibility in those variations as well, but they are not as vast or as elaborate as compared to the forex markets, right? We're talking of almost 24 hours, but when it comes to the English share market, it's just around 6.5 to 7 hours, correct? So we talked about the forex market. So conversely, the stock market hours are much more restricted and are typically limited to the standard business hours of the country where the exchange is located. All right, so I hope people are getting a clear understanding of what are the differences. Let us go to the next point, which would be leverage. Like I had talked to you about leverage, the forex markets are offering a leverage of 1 is to 100. When compared to the share market, we are getting a very minimum leverage of 1 is to 5, but that is only possible during intraday. If you plan to hold your trades for the next day, what we term as delivery of a stock or holding of a stock, your leverage dissipates, right? It disseminates. You do not get any leverage. Your leverage is zero. Basically, the purchasing power in your trading account is exactly the value with which you can purchase the stocks. There is no added purchasing power, correct? Unlike the forex markets where you're getting a purchasing power of 1 is to 100 times the purchasing power of your invest of your trading account. Then in terms of volatility is basically high when it comes to the forex markets, right? Which basically means prices can shift dramatically within minutes. This is basically due to the global nature of the forex markets and the continuous flow of economic news that directly influences currency values. I'm pretty sure all of you who have been to a currency exchange center is aware that the prices that are mentioned for the different currency rates of different countries, they keep changing on a second to second basis, right? Because of volatility, because of the economic conditions, whether it is in terms of news or policies or interest rates or Fed announcement. There are many factors when it comes. But comparing it to volatility in the stock market, it's slightly more nuanced in terms of it's a little on the less volatile side, right? And varies widely depending on the type of stock. In general, blue chip stocks, which represent a large financially stable companies, exhibit lower volatility and provide more stability, correct? In contrast, penny stocks, like I had mentioned, they are known for their low prices and limited market cap. So there is a lot of volatility in those particular sectors of stock market, correct? But overall, in general, the forex market is much, much more volatile when compared to the stock market. Let us go to the next point where we will be talking about liquidity. So, liquidity is basically how quickly you can buy and sell in an exchange, whether it is the forex market or the stock market, correct? Without having any kind of significant price movement. So, forex, like I had mentioned, is having a daily trading volume of $7 trillion, right? Let me give you a couple of seconds to let that information sink into your head. $7 trillion on a daily basis is the volume that is being traded in the forex markets, correct? And based on the size, you can understand that there is enough of liquidity when it comes to the forex markets. You will never have any issues in terms of liquidity when we are talking about forex markets. I'm focusing more on the base forex markets, the ones that have the dollar associated. Let me just clarify what I'm trying to say. In terms of the currency pairs that we are looking, we have these, right? There are many, but these are the major eight. So when it comes to liquidity, I'm talking of the base forex pairs. What are the base forex pairs? Base forex pairs are the pairs that you can see on your screen. I'm talking about euro dollar, pound dollar, dollar Swiss, dollar yen, dollar CAD, Aussie dollar, New Zealand dollar. For people, I guess it might be quite a lot of information, but these are the terms used for the currencies, right? The euro against the dollar, the British pound against the dollar against the Switzerland franc, the Swiss franc, the dollar against the Japanese yen, the dollar against the Canadian dollar, the Australian dollar against the US dollar, and the New Zealand dollar against the US dollar. So these are the certain basic pairs or base pairs which have a huge amount of liquidity, correct? If for people who are not aware, the most highly traded forex pair in the world is euro dollar, right? The one that we are currently looking at. Anyways, let's get back to the topic of liquidity, correct? So when comparing the forex markets to the Indian share market, based on what I've researched, the average daily volume traded in the Indian share market is around 18 billion, correct? 18 billion. I'm talking in terms of dollar, $18 billion. But comparing it to the size of the daily traded volume in forex market, it is nowhere close to it. That is the power of forex markets due to its immense size and abundance of capital flowing, capital being transacted across the globe. The liquidity based on a daily volume average is almost $7 trillion. All right, let's get to the next topic, which is basically influences on market price. Now when we're talking about the certain factors that have influences on price, when it comes to currency pairs, we had talked about economic indicators, right? We have GDP growth rates, unemployment figures, inflation data. So such important factors are basically making the forex market highly responsive, right, to international economic trends. And with these factors in play, there is a huge increase in volatility, right? When compared to the to the to the stock market, the prices are affected much by a wider range because the stock market includes microeconomic factors as well as macroeconomic. It could be certain changes or advancements or declinements in the company in its own, or it can have other major economic factors such as FIIs, DIIs, the changes in terms of the liquidity, in terms of funds that are being flowing, in terms of RBI policies, in terms of certain sector policies that have been instated by the government. So there are many macroeconomic as well as microeconomic factors, correct? Now let us go to the next topic, which was basically going to be cost of trading. As I had mentioned earlier as well, when it comes to cost of trading for forex, it is very very minimal compared to the stock market, right? So forex brokers are making money on the spread of a currency pair. Spread is basically the difference between the bid and the ask price, correct? We will be talking more in detail at a later stage, but this is the money that the brokers are able to make, and that is very very minimal when you're comparing it to the stock market, correct? So unlike the forex, the stock market generally charges the spread. So even the stock market has a spread, and on top of that, they also charge you a commission, right? Which are around $5 to $10. So you're getting a clear understanding where the money that is being made by the brokers in forex is just based on the spread. When it comes to the stock market, it's not just the spread, but the commissions and sometimes even service charges are included as well. So you are paying quite hefty when it comes to the forex market. Now, most importantly, since we are all having different personas, different personalities, and different approaches in terms of life and in trading, we should have certain points that need to be clarified for people who are more inclined towards forex trading versus people who are more inclined towards stock trading, correct? So when it comes to forex trading, who should consider trading forex? So first of all, it's flexible and it is apt for people who are in that fast paced life of trading. Forex markets are open for 24 hours. They operate for 24 hours during the weekday, offering flexibility, particularly with those with irregular schedules or who enjoy trading in a dynamic environment. Like I had mentioned, first and foremost, the timings of of the forex markets are incredible, right? 24 hours a day, 5 days a week, plus a lot of volatility in the market. So, first, it is good for people who have erratic schedules, and second, it is good for people who are looking for a lot of volatility because the forex markets come with a good amount of volatility. Then, high risk tolerance traders with the possibility of using high leverage. Forex traders offer substantial profit potential from relatively small price movements. How is it high risk tolerance? It all boils down to the leverage, right? When you're getting a leverage of 1 is to 100, you are able to have a purchasing power 100 times of your initial investment balance, correct? When compared to the stock market, you do not have the privilege of such leverage. And that is why forex trading is more volatile and more risky, correct? Coming to global market enthusiasts, if you're interested in global and geopolitical politics and economics, and if you want to understand how these factors impact currency values, forex trading is for you, correct? Now, for people who are trying or who are keen on knowing more about the share market, right? Who should consider trading in the stock market, correct? Long term investors. If you are preferring a more strategic, researched approach to investing, again, we are talking of investing, not even trading. Stocks might be more suitable, right? Because it helps you to hold on to investments over an extended period, potentially benefiting from company growth and dividends, which can lead to substantial returns. Unlike the forex market, people who are mainly into equity trading in the in the share markets are mainly coming with the purpose that I want to park my funds or my savings in the stock and I want to let time go so that the company in the future can make more money in terms of growth and I should be able to make extra money in terms of dividends, right? Then we have routine oriented traders, those who prefer trading during set hours and like having a clear separation between trading time and personal time would appreciate the stock market hour. For people who are very clear headed and who are very segmented in terms of they want to make sure that they can completely segregate their work life from professional life, from professional life to personal life, them for them stock market would be a better option in terms of the time period because the share market timings are fixed. Unlike the forex markets which are open 24 by 5, the share markets are limited, right, when it comes to the market timings. And risk averse individuals, if you're cautious with your investments and prefer a more stable and predictable market, stocks usually offer less volatility than forex, especially for blue chip stocks, right? Blue chip stocks will be any stocks that are listed on the National Stock Exchange or the Bombay Stock Exchange, right? Those are the blue chip stocks. Now, let us talk about the final note in terms of what is the right decision. Should we go for the stock market? Should we go for forex market? And the decision is simple. The decision to trade forex or stock depends upon your financial goals, your availability, and risk appetite. Consider exploring both markets with small or simulated investments to discover what best suits your trading style. Ultimately, both paths offer significant opportunities to expand your financial knowledge and growing of your investment. So, these are the points which have been most important, especially the key differences, right? In terms of assets, in terms of trading hours, in terms of leverage, in terms of volatility, in terms of liquidity, and in terms of cost. These are the main factors that one should be looking at when comparing the differences between share market trading and forex trading, right? In terms of forex, definitely there are more advantages in terms of entry, in terms of leverage, in terms of volatility, and in terms of cost. Now, when we were talking about the forex pairs, There are many. Altogether, I guess there are more than 230 countries in the world. That does not mean that the forex markets include all the 230 countries. We would be focusing on the major pairs, right? With the US dollar being the number one player when it comes to the financial markets of the forex markets, correct? Because the US dollar denominates, not the sorry, denominate it dominates the entire forex market due to its huge size and with the attraction that it is able to capture a lot of people across the globe, correct? So that is the reason we will be focusing on the dollar pairs, correct? Dollar pairs are very important, and that is the reason with the inclusion of dollar pairs, which are basically called as basic pairs or base pairs, we would be focusing on such pairs where the entry to a particular trade is as minimal as possible, because with liquidity being the major concern for people's criteria when it comes to forex trading, we want to focus on those currency pairs which people have been using for transactions, entirely across the globe. We are not looking for certain pairs such as, I do not want to name those pairs, but currencies of developing nations or underdeveloped nations, even though they might be included in the foreign exchange, those particular pairs are not to be traded because of lack of volume. So we would be focusing majorly on the base pairs. Having said that, we even have cross pairs. What are cross pairs? The simple difference between base pairs and cross pairs is the exclusion of dollar. If you're having dollar, I'm talking of the US dollar, right? If you're having the US dollar in a forex pair, that is considered to be a basic or base, right? Whichever terminology you want to use. If you are not having the US dollar in a particular forex pair, that is called as a cross pair. So cross pairs can be certain examples like the euro against the British pound, the Swiss franc against the Japanese yen, the Australian dollar against the New Zealand dollar, the Canadian dollar against the Japanese yen. So there are many permutations and combinations when it comes to forex markets, right? In total, we would be looking at around 28 pairs, which include the base pairs, which are the US dominated pairs, as well as cross pairs. So in total, we have eight forex pairs which are of prime concern, right? These eight forex pairs are generally comprising of around 85% of transactions in the foreign exchange markets, right? Very, very high volume. Based on the daily average traded volume of 7 trillion. If I'm mentioning 85%, it is quite a substantial amount in terms of volume, correct? So I hope everyone has had a good understanding. The main focus of today has been to enlighten you with the key differences between stock market and forex market. Stock market being more towards buying and selling of shares, and forex markets are basically mean are more into trading of currencies, right? One currency against the other. So let me give you a quick recap of in terms of what has been shared. Let us quickly have an overview of the PowerPoint in terms of what were the discussions that we had talked about. We had talked about the definition of stock market, the forex markets, but most importantly the key differences, right? Key differences in terms of assets to trade, in terms of trading hours, where we had mentioned the forex to have 24 by 5 time frame for the duration of trading. The stock market is only applicable during the stock market hours. Every country has its own timings. The English share market timings are based between 9:15 a.m. in the morning to 3:30 p.m. in the evening. I'm talking of standard operating hours. If someone is informing about certain terminology, or sorry, if people are talking about flexible trading hours, you do have something called as pre-market and post-market. but it is nowhere closer to the trading hours of the forex markets, which is 24 hours, correct? In terms of leverage, like I had mentioned, the stock market does not offer leverage if you are planning to hold trades overnight. But when it comes to the forex markets, you have a minimum leverage of 1 is to 100, 100 times the size in terms of purchasing power based on your initial investment, right? So that is commendable, that is very good. Yes, Aditya had also mentioned that since leverage can be risky, correct, for traders, leverage is always a double-edged sword where yes, it can, make money, but it can also make you lose a lot of money. So it is how you use it to your advantage. You have the power of leverage. Now it is in your hands how you decide to use leverage. Whether people want to be having a conservative approach, whether people want to have a very risk appetite approach, it is up to them, right? But the service that is being provided in terms of leverage is commendable, right? 1 is to 100 on a minimum basis, and with dolphin markets you're getting 1 is to 500, correct? 500 times the purchasing power of your initial investment value. Looking at volatility with the onset of huge amount of leverage, there is high volatility as well. Basically, in terms of geopolitical factors, news events, Fed rates, government policies, inter geopolitical, embargoes or certain detrimental factors, whatever you name it. Since we are considering the world as a whole, the number of news events are much more significant when compared to a country's stock market, which is generally affected by the factors around that particular country itself. But the forex market is affected globally, right? And that is why we have good amount of volatility. In terms of liquidity, I had mentioned you, forex market has a daily turnover of $7 trillion when compared to the stock market, which has an average daily traded volume of $18 billion. Yes, both the values are large, but when you're comparing it with the forex market, there is no market that can come even close to the forex markets. In terms of influences, we had mentioned, and in terms of cost is very minimal in the forex markets, but when it comes to the stock market, it is expensive, correct? And how is the cost low in forex market is because of the added leverage that you are getting, and especially the volatility that can make, or can has the potential to make you good amount of money. And we talked about all the major points in terms of the detailed description of each and every terminology that we had mentioned, correct? So all the topics that were mentioned in the distinct in the differences and the key differences had been talked about, in terms of assets to trade, in terms of trading hours, in terms of leverage, in terms of volatility, in terms of liquidity, in terms of influences on market prices, in terms of cost of trading. And we also talked about the different aspects when it comes to what is most suitable for people, whether it is forex trading that is suitable for people, or whether it is stock trading, since everyone is having different aspirations, different personas, different personalities, different likes and dislikes. Similarly, one should do their due diligence, their research when it comes to deciding whether it's forex market or stock market. Here we at Dolphin Markets would suggest you to take both, take stock trading and take forex trading, because we provide you with trading opportunities in the Indian stock market, and we will provide you with trading recommendations in the international markets, the forex and gold markets as well. So whether you want to consider forex trading or stock trading, I would suggest you take both, trade on both the markets. It's a win-win scenario, correct? Here at Dolphin Markets, we have an ideology where we consider the Indian share market to be the left hand, and the stock market, the forex market, to be the right hand. We want you to make money both ways, all right? And we also looked at the sorry, in terms of the points that were considered for forex trading is based for people who have flexible timings and who are fast paced traders who have high risk tolerance and who are interested more in the global markets. When comparing it to stock trading, people, it's mainly for those people who are into investing, correct? It's less of trading and more of investing, and it's mostly for people who have a fixed routine in place, right? And for those who are looking to have low to moderate amount of risk, unlike the forex market, which is more volatile and risky, the stock market is comparatively less volatile and risky as well. But most importantly, the final note which we had talked about was the decision is ultimately residing onto you. What are your attributes? What are your concerns in terms of factors which are aligning you to the forex markets or to the stock market? So I hope everyone has had a great understanding. We have shared a good amount of understanding. We had even mentioned you the different forex pairs and how forex pairs in general have a seesaw effect where you can buy one currency and you are indirectly selling the other or vice versa. And this is the main reason why you can buy and sell forex uh, without having any kind of restriction in terms of holding the trades. But when it comes to the share market, you can only hold it, and for if you're planning to to carry it forward or to take delivery of it, right? So I hope everyone has had a great learning. I hope everyone will have a great weekend. I wish you all the very best, and hopefully everyone has a great and safe weekend. I will be catching up with you later on in the next week. So until then, everyone, hope you had a great time, and I will see you later. Until then, namaste and take care. Bye bye.